Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, January 10th, 2024. I am Frank Ochoa, aka PivotBoss. Happy hump day, everyone. Here's a look at the daily time frame of the ES right now. Very narrow range at the moment. Narrow range of price action heading into the RTH Open. Just 18 points of range. If we switch this back over here to a one-day reading here, we'll get that actual reading. 18 points of range, 40% of average, very narrow going into the RTH Open. We also have, again, heading into the latter part of the week here, we have inflation data coming up. Today could be another range-bound day onto yesterday's range-bound day ahead of Thursday and Friday CPI and PPI data. Today we do have crude oil inventories later on in the day, 9:30 a.m. Central, and at noon, 10-year note auction could provide some volatility. As of right now, this market remains very narrow within this range over the last several weeks. Upward bias in the very short term, but we're still kind of starting the year very, very compressed, and that compression could continue to develop. A little back and forth, a little up, a little back, a little up and back, and it continue to develop here for a little while longer until we're ready to move. Again, inflation data, CPI prior to the RTH Open Thursday morning could provide a little bit of a spark for expansion. Real quickly here, programming note, I will be hosting a monthly market outlook later on today at 4 o'clock p.m. Central Time. Please join me using the link in the description below. All right, taking a look here at the NQ. Right now, NQ also very narrow, 100 points of range. 100 points of range is 46% of average at the moment. Very narrow, right at the center, 16.8, right at the center of this larger range here, and has been inside this range for a while. We could continue to see some development here. Again, this market right now bouncing off of the previous month's midpoint. That's a very important level right there, because a failure at that point starts to open up some downside. So to hold that level keeps prices in this upper range here with an upward bias at the moment. All right, take a look here at crude oil. This one's down, rather up 1.23% at the moment. This one has been compressing back and forth, back and forth. You can see this 72 is kind of the midline for the year. We've gotten up to 74, we've gotten down to 70, and it's a 4-point range to begin, the first 7 trading days of the year for crude oil. It's a wide-ranging trading range, but there's a ton of energy. There is 10 to 12 points of energy inside this pattern. Once we get a breakout, 10 to 12 points could be seen as a result. You break through 84, you have an 74, you have an 84 up ahead. You fail here at 74 and drop, you got 64 down below. So you have a 10-point move coming up ahead. A lot of compression here, back and forth. It's hard to say which way we go right away. I could see it both ways. Seasonality has us bullish. The downtrending market here over the last few months has us bearish. And if we break down through 70, things really open up. So again, being patient here for directional conviction out of crude oil, but 10 to 12 points of action coming soon. Looking at gold futures, up about 0.25% right now, very narrow range overall. 17 points, trading within a narrow 3-day range at the moment, downtrend, and sitting right on top of the 2029 level, a level we've talked about quite a bit to begin the year. We have this key range right here, and it's sitting in the middle 50% of that key range. If we fail at 2029, it starts to open up lower levels into about 1985 or lower. Holding this zone, and you bounce back up and kind of stay in the range right now. As we've mentioned before, given this huge impulse move here, gold price is likely to stay inside this middle portion of the range. They have. Now are we about to see some additional movement? We do have this trend line here that's in play. Again, a failure here, and you start to open up a little bit of a downside back toward the 1980s. But so far, again, price holding below the 2080 level. Rejection prices above 2100, that would suggest a continued pullback into the larger range below, with 1850 being in the middle of the range down here. Lastly, looking at the YM here, super narrow range. Going on, what is this? Nearly 20 days of super sideways compression. This amount of compression here has at least 2,000 points of range in it. 2,000 points. We're at 37,750. We drop 35,750 is right here. That's the amount of juice we have in that range. At the very least, that's a modest estimate. If we were to see a major reaction up here, for example, a hard high and then drop, we could use that high and forecast down about 2,000 to 2,500 points, and you're going to get a good move over the next 3 to 4 weeks. So again, building some energy. This was expected. Last thing here, big check mark move to finish Q4 of last year. That amount of movement is going to bring about some compression in the beginning of the next time frame, and that's what we're seeing right now. We're seeing some compression building out still until proven otherwise. Once we do get expansion, at least 2,000 points of movement. All right, that is it for now. We'll see how this plays out the rest of the session. Please join me later on this afternoon for the monthly market outlook. Again, the link in the description below. Take care, and I'll see you soon.